Welcome back to Fat Bear Pod. I'm your host, PB. So, yesterday was a classic, man. Bitcoin strutted its stuff up to a high of 84.7K before stumbling back down to close at 84.3K. No massive swings yet. Could it tank? Could it pump? Flip a coin, fam. I've been wrong enough times to know it's anyone's guess. Trading volume? A decent 25 billion, down 32% from the prior 24 hours. Guess the whales are napping going into the weekends. The fear and greed index went up slightly to 27, but still in the fear territory. At least it's not in the casinos on fire. Sell everything territory last week when Bitcoin hit 78K. Big 24-hour gainers were PancakeSwap, Hyperliquid, and BeraChain, all in the double digits territory. On the macro side, the Fed's been playing hardball lately, keeping rates tight. The Fed's tightening cycle might not flip until we see a proper economic faceplant. High rates juice up the US dollar, and that's bad news for risk assets like BTC. Because when borrowing costs are high, folks ditch the Lambo dreams for safer bets like bonds. Let's talk M2 money supply, the cash sloshing around the global system. Historically, when M2 spikes, like during the COVID stimulus orgy of 2020 and 2021, Bitcoin rides the wave. Right now, central banks aren't exactly opening the floodgates. The Fed's hawkish stance and whispers of terrors from Trump's camp are keeping liquidity tighter than a bear market bar tab. Less cash floating around means less fuel for Bitcoin to blast off, leaving us stuck in this limbo. Next up is some crypto news. Donald Trump's latest shindig was speaking at the Digital Asset Summit in New York, held on March 20th. Picture this: a room full of suits, orange hair glowing under the lights, and a promise to make the U.S. the Bitcoin superpower of the world. The big headline? Trump's doubling down on the strategic Bitcoin reserve idea. He kicked off with that executive order on March 6th, and he's got a new twist. He's calling on Congress to pass stablecoin legislation. That's right. The man wants to legitimize those pegged to the dollar tokens that keep half of us sane when BTC decides to nosedive 5% in an hour. But despite all the chest thumping, the market's reaction was a big old meh. Trump spent half the time dunking on Biden and the old regulatory mess. Like, yeah, we get Don. Biden's SEC was out here treating crypto like a piñata at a kid's party. But where's the meat? Where's the holy crap, by everything moment we've been conditioned to expect from these summits? On the international front, the International Monetary Fund is finally waking up to the fact that crypto's not just some shady side hustle anymore. They've tweaked their balance of payments and International Investment Position Manual, or BPM-6 for short, to include digital assets like Bitcoin. It's the first time crypto is getting a proper seat at the global monetary table, tracked in the balance of payments, the ledger that tallies up a country's economic transactions with the world. This is the IMF admitting crypto's too big to ignore now. Congrats, IMF. You've caught up to 2017. While we've been sweating pumps and dumps, they've been busy writing memos about how Bitcoin might mess up their precious spreadsheets. The IMF's obsessed with stability, and this move says they're scared crypto's outflows. Think Nigerians buying USDT or inflows, El Salvador's BTC bets, could destabilize their tidy little world. There's also some spicy news straight from the US Treasury Department recently. They just said, you know what? Tornado Cash, you're off the naughty list. That's right. They've yanked the economic sanctions on this crypto mixer. People took notice as price pumped 2x in just a couple hours. Someone in DC finally realized that banning a mixer might not solve all their problems. But don't get it twisted. They're still side-eyeing North Korea. They still recommend that degen should exercise caution when spinning up transactions that might accidentally fund a dictator's missile program. Good advice, Treasury. I'll just add that to my daily checklist. Buy low, sell high. Don't bankroll weapons of mass destruction. Got it. Time for some DeFi news now. Let's talk fresh BeraChain development that's dropping next Monday on March 24th. That's right. While you're out partying the weekend, BeraChain has been working on launching their proof of liquidity, POL for short. Phase 0 is this cute little warm-up act, a limited rollout in BEX pools to spread that sweet, sweet BGT token around like confetti. Now, they're upgrading the contracts to start the real fun, incentive distribution. That's right, users, apps, and validators are about to get their slice of the emissions pie. New vaults are popping up like weeds in a bull market, and the incentives are flowing faster than FOMO into a 100x meme coin. Here's the kicker. Polls setting the stage for everyone to earn BGT just for playing with your favorite dApps. Provide liquidity, trade some perps, play a blockchain game, or bootstrap some RWAs and depin. If these Bera builders can dream it up, you can stake it and poll it. It's like they're saying, hey, you're a degen anyway, might as well get paid for it. There's a new buzz from Farcaster. Apparently, they got a shiny new toy called Snapchain. It's built to handle over 10,000 transactions per second and support millions of users. For a flat annual fee, yes, you heard that right, a subscription, you get unlimited transactions. No more gas fee nightmares. So what's the catch? The fixed annual fee for unlimited transactions sounds appealing, but assumes the network can sustain low operational costs. If usage spikes, fees could rise, or the system might throttle performance to keep costs down. But I think the real reason here is that decentralized social media is just not catching any interest. Everyone's basically living on X anyway. And Farcaster raised $180 million from VCs. Those guys probably want some returns before this bull market ends. Next, we're tackling Peapods Finance's leverage volatility farming, or LVF, because apparently regular yield farming wasn't degenerate enough. The basic gig is simple. Wrap assets into these things called pods. Think ERC20 tokens with Twist, pair them with another asset, and farm the price swings between them for yield. It's like arbitrage on autopilot, with fees from traders keeping the engine humming. No token inflation, no bribes, just pure, chaotic market juice. Cute, right? Well, LVF takes that and cranks it to 11. Unlike the 100x liquidation, roulette we degens love to lose at, LVF's risk is tied to impermanent loss, not wild price swings wiping you out. If your borrowed ETH tanks, your LPC side tanks too. They move in sync, so liquidation's less of a boogeyman. IL can sting when volatility cuts the wrong way. So don't kid yourself into thinking it's risk-free. Finally, we got 2 airdrops to farm on Solana, Loopscale and Exponent Finance. A nice strategy you can use is looping PTMLP from Exponent on Loopscale. You can buy the PTMLP token from Exponent. Think of it like a ticket that's designed to increase in value as it gets closer to its expiry date. It's stable and less risky than some other crypto tokens because it's stripped of volatility, giving you straight yields. You take your PT tokens to Loopscale and borrow USDC against it. Then, you use that borrowed USDC to buy more PT tokens at the current market price. This process is called looping because you're essentially doubling down on your PT exposure. As your PT increases in value over time, and because you now own more of it thanks to the leverage, you earn higher yields. You also earn points for both protocols, basically tripling your yields. That's it for today's Fat Bear Pod. I'm your host, PB. Catch you next time.